In accordance with section 56 of the Constitution and appropriation for the purposes of this bill. Is leave granted to move to the third reading immediately? I call the member for Cunningham. I thank the member for Cunningham and I call the Leader of the House.
Mr Deputy Speaker, with great pleasure I move this bill be now read a third time.
I put the question that this bill be now read a third time. All those with that opinion say aye. The contrary no. I think the ayes have it. Noes have it. Division required. Division required. Ring the bells for 1 minute and I appoint the same tellers as the previous division, and it would certainly help if members were to remain in their seats during this successive division, unless they are leaving the chamber. And if they are, they must report to the tellers. Lock the doors. The member for Aston, is he returning to his seat during the division?
He's recently come in and he's reported.
Oh, sorry, my apologies. Reporting. Just checking. Yes. Order. The result of the division is ayes 78, noes 54. The question is therefore resolved in the affirmative, and I call the clerk.
Third reading, a bill for an act to amend legislation relating to higher education and research and for other purposes.
Order. Those who may be leaving the chamber, will they do so quietly and quickly and not conduct another conversation on their way out? And I will now... Yes, I'll call the clerk for the...
Government business, order of the day number 2, Tax and Superannuation Laws Amendment 2014, Measures number 7 Bill 2014, resumption of debate on the second reading.
Before the debate is resumed on this bill, I remind the House that it has been agreed that a general debate be allowed covering this bill and the Excess Exploration Credit Tax Bill of 2014. The question is that this bill be now read a second time, and I call the Parliamentary Secretary for Communications and the Honourable Member for Bradfield.
Thank you, Mr Deputy Speaker. I'm pleased to
and
rise...
just while you are, those who are planning to leave the chamber, would you do so quietly and quickly?
I'm pleased
and the member for the Parliamentary Secretary has the call.
I am pleased to rise to speak on the Tax and Superannuation Laws Amendment 2014 Measures number 7 Bill, an important bill which will amend various taxation laws to implement a range of improvements to Australia's tax system. And in the time that I have available to me this morning, I want to focus specifically on the amendments in this bill which give effect to the Coalition's measure included in the 2014-15 budget to allow individuals the option of withdrawing superannuation contributions in excess of the non-concessional contributions cap made from 1 July 2013 and associated earnings, with these earnings to be taxed at the individual's marginal tax rate. I want to make 3 points in my contribution, Mr Deputy Speaker. Firstly, that there has been, prior to the introduction of this bill, a nasty problem in the tax system which has led some Australians to face marginal tax rates of up to 93% on excess superannuation contributions. Secondly, while the previous Labor government sought to address this problem, they did so in an inadequate way. And thirdly, that the Abbott government is acting to solve this problem. So let me turn first to speak about the nature of this problem, the fact that, as the tax laws have previously stood, Australians could be exposed to extremely high rates of penalty tax in circumstances where they made an innocent and inadvertent mistake in the amount that they contributed to superannuation. As you know, Mr Deputy Speaker, there are limits on the amount that any Australian can contribute to superannuation so as to enjoy the benefits of concessional treatment. The concessional treatment, of course, being that monies which are paid into a superannuation fund are taxed at the rate of 15% rather than the individual's marginal tax rate. The policy reason underlying this concessional treatment is to encourage people to make provision for their own retirement through building up a significant superannuation balance, and in turn that means that they are not reliant or not entirely reliant on a government-funded pension. Now, the important point is that the concessional tax treatment is only available up to the concessional contributions cap, which in 2014-15 is $30,000 for those under the age of 50 and $35,000 for those 50 and above, but in previous years under the Rudd-Gillard-Rudd government was $25,000. And the position was that individuals were taxed on any superannuation contribution in excess of their cap as at the top marginal tax rate. And the combined effect of a number of provisions under the law as it previously stood was that the total tax that could be applied to some breaches was as high as 93%. This was an exceptionally punitive rate of tax, and it could apply in circumstances where an Australian made an innocent error. Let me describe a number of ways in which it was possible for people to innocently find themselves in the position where they were exposed to this very high tax rate. One scenario would be that a person was salary sacrificing a large amount of money into their superannuation fund and made a calculation error as to the amount that they were able to contribute without attracting the excess contributions tax. Another scenario was that an employer could make additional contributions to the employer's superannuation fund in ignorance of other contributions made by the employee, and the combination of the two sets of contributions could potentially trigger the excess contributions tax. Another scenario was one where a person had a windfall and made an error by contributing too much of that to superannuation without realising the consequences that may follow, or another scenario, and one that occurs not infrequently, is that Australians make a decision in terms of contributing to superannuation in reliance on advice from a financial advisor or accountant, and it's possible for people to receive bad advice. So if you make a contribution which exceeds the limits and you end up, through a range of circumstances that I'll describe shortly, being in this position of facing marginal tax as high as 93%, you could find yourself in that position not because of any conscious decision you'd made, but because you acted in reliance on advice, and it turned out that the advice was flawed. Now, the particular scenario where you could end up, under the law as it previously stood, facing a marginal tax rate as high as 93%, was that if you made a contribution and you exceeded the cap, which, as I've said, used to be $25,000, then the position used to be that you were then exposed to the excess concessional contributions tax of 31.5%. But if you were also making a non-concessional contribution, that's to say a contribution made out of post-tax income, you also faced a limit, which in previous years was $150,000 a year, or you could bring forward 2 additional years and in practical terms have a limit of 3 times the $150,000. But if you exceeded the non-concessional contribution, then any excess amount attracted a tax of 46.5%. And when you put those 2 sets of provisions together, the position was that in certain circumstances Australians could be exposed to a marginal tax rate of up to 93% on a superannuation contribution, because in some circumstances you would make a payment that exceeded the concessional contribution cap but also happened to tip you over your limit for non-concessional contributions. And once you were over that limit, then you faced, as I've mentioned, potentially a marginal tax rate as high as 93%. So it's a very poorly drafted set of provisions which visited upon Australians who made an innocent mistake extremely harsh and unfair consequences. Well, throughout the period of the Rudd-Gillard-Rudd government, the coalition called on Labor to address this matter. Unfortunately, Labor made an inadequate and half-hearted attempt to deal with this problem. And let me spend a moment talking about the way that Labor responded. The first response was in 2010, when the then Labor government passed legislation which allowed the Commissioner of Taxation to exercise a discretion for the purposes of excess contributions tax before an assessment was issued. And this was an inadequate response to this very serious problem. Recognising the inadequacy of the response, in 2013 the Labor government had another go, introducing legislation which allowed individuals to withdraw any excess concessional contributions made from 1 July 2013 from their superannuation fund without penalty. So, in a year where the concessional contributions cap was $25,000, as it was for most of the years of the Rudd-Gillard-Rudd government, if you inadvertently put in $28,000, for example, this new law would have allowed you to remove the excess $3,000 without penalty, and instead you'd have that amount subject to tax at your ordinary marginal tax rate. This was a partial solution to the problem I've described, Mr Deputy Speaker, a partial solution, because the law was not changed in relation to excess non-concessional contributions. It was changed in relation to concessional contributions, but not in relation to non-concessional contributions. So the problem remained that if you inadvertently made a contribution, a non-concessional contribution, and you went beyond the limits in doing so, and that could occur for any of the many innocent reasons that I've explained, there was, and prior to the passage of the bill before the House today, there remains no capacity to correct that problem. This matter was dealt with in a report by the Inspector-General of Taxation in March 2014, entitled Review of the Australian Tax Office's Compliance Approach to Individual Taxpayers' Superannuation Excess Contributions Tax. And that report made a number of points. It observed that while a smaller population of taxpayers exceeded the non-concessional contributions cap, as opposed to the concessional contributions cap, the impact on those taxpayers was more severe. Further, the Tax Office statistics showed that across all years, approximately half of taxpayers who exceeded their non-concessional contributions cap were within the lowest taxable income range. In other words, it's incorrect to assume that people who were caught by this measure are people who are necessarily wealthy. The statistics show that around half of taxpayers were within the lowest taxable income range. And for this reason, the report recommended that the government consider whether the current treatment of excess non-concessional contributions should be aligned with that of excess concessional contributions to minimise adverse impacts on affected taxpayers. And that brings me to the final point I want to make in my remarks this morning, Mr Deputy Speaker, that the Abbott government is acting to solve this problem, and we are acting in a way which gives effect to the policy commitment that we took to the last election, that we would develop appropriate mechanisms to address all inadvertent breaches of the superannuation contribution caps where the error would result in a disproportionate penalty. The measure that is contained in the bill today was announced as part of the 2014-15 budget, and the amendments in this bill deliver on that commitment. The change that will be given effect to, if this bill passes into law, will allow people the option of withdrawing excess contributions and any associated earnings, and the earnings will be taxed at the individual's marginal tax rate. And this measure will apply to non-concessional contributions made from 1 July 2013. This is an important measure, Mr Deputy Speaker, which gives Australians an opportunity to correct an inadvertent mistake and in turn to avoid the punitive aspects of the existing excess contributions tax regime. These changes will ensure that the treatment of excess concessional contributions and of excess non-concessional contributions is broadly consistent. So unlike Labor's half-baked approach to this problem, the Coalition is introducing a comprehensive solution. The amendments are expected to affect around 1,000 individuals in 2013-14, and for those individuals they will now be relieved of facing a very difficult problem, and a problem which frankly resulted in a capricious and unfair response to what was in many cases an inadvertent error. So, Mr Deputy Speaker, the measures in this bill deliver on the government's election commitment. We said we would develop an appropriate process which addresses inadvertent breaches of the contributions cap where the error would result in a disproportionate penalty. We said we would do that, and in this bill we are giving effect to that commitment. These amendments are consistent with our economic strategy to drive growth, to create jobs and to have a more flexible, dynamic and competitive economy. We have identified a serious design flaw in the tax system, and with the measures in the bill before the House this morning, we are acting to correct that design flaw.
The question is that this bill be now read a second time, and I call the honourable member for Oxley.
Thank you, Mr Deputy Speaker, and it's a pleasure also to speak on this particular bill, the